day, everyone, and welcome to the Premium Video Newsletter for Monday, August 26, 2013. I hope you had a great weekend and got some rest. The summer's coming to an end and Labor Day is just around the corner. I also want to welcome several new members to our service this week as well. Let's start off with the fundamentals. Orders for durable goods plunged 7.3% in July. This follows 3 straight months of increases. It's the steepest drop in nearly 1 year. Durable goods are items meant to last at least 3 years. The big drop suggests the third quarter is off to a weaker start than some traders had hoped. While economists caution that it's just a 1-month data, a few lower their growth estimates for July-September quarter after seeing the report. Many economists believe that the pickup in economic growth in the second half of the year will be more gradual than the first. Today is a great example of what I was discussing the end of last week and during the weekly outlook last night. The broad market opened higher and the NASDAQ market was very strong at the opening today. But as soon as the broad market turned down towards the end of the trading session, it pulled down the tech sector with it. If you recall, I stated that for us to see a real rally, the kind that will cause us to break out to new highs, we need to see the broad market and the subsectors on board. And we didn't see that today. What we saw was a tech market that was ready to approach new highs and a broad market that pulled it down as we were afraid it would. Let's take a look deeper to see if we can figure out where the weakness is coming from today. The broad market closed slightly below the 50-day moving average. Not anything major, but enough to get traders and fund managers back into liquidation mode. We need to move above this level if we're going to go up, and right now we have the same sectors holding us down as we did last week. The financial sector opened stronger today, but sold off towards the end of the trading session. When we have such strong turnaround from the highs to lows and closing near the lows, it typically suggests more downside selling pressure is ahead. The next short-term support level for the financial sector is at the 1970 level, and we will most likely see that level tomorrow near the opening bell since we're very close to it. And all we need is just a little more downside to get there. The retail sector also made a surprising higher high in the morning, but ended weaker towards the end of the session. The next level on the downside is the 78 level, and I also believe we will touch it most likely near the opening or during tomorrow's trading session. One subsector that I use for important levels is the transport sectors, as you know, and we finally are above the 50-day moving average for 2 days in a row. This is very important and shows that not all subsectors are experiencing the distribution or the selling pressure at this time. Let's see if we can get higher closing tomorrow and if we can get some more sectors above the 50-day moving average before Thursday's and Friday's federal reports that are more likely than not going to create some volatility in these markets. Microsoft is cooling off from the announcement that Steve Ballmer is stepping down, and this is what gave us the initial push that we needed in the tech sector on Friday. But the news is out, and unless we hear news that Bill Gates is coming back as the CEO, I doubt we will see another multi-point move in Microsoft to the upside, at least similar to what we saw on Friday. The reason why I'm bringing up Microsoft is because this was a big contributor to the gains we saw Friday of last week. And if this stock really begins softening up, it may cause additional weakness in the NASDAQ sector. And that's not something we need right now, considering how delicate the market is now in terms of strength versus weakness. So let's keep an eye on Microsoft over the next few days and see if it breaks the 34.15 level to the downside. Because if we begin filling the gap on the downside below the 34.15 level, we may really begin seeing more selling pressure and see the opposite of what happened late last week. Be aware of this and watch the stock carefully, especially during the next 2 days. There are many buyers who bought on Friday who will be selling if we break the current low levels. The next market I want to look at is the energy market, and it looks like our analysis from last week was accurate. We went slightly higher today and backed off right away. The way I'm looking at the crude oil market right now, it looks like we're at our fourth top today. The peak was at 107.95 last time around, and today we hit the 107.35 level, which is fairly close. Look for the 104 as the next level on the downside, followed by the 102 level. I could be wrong and we can go higher, but as of right now, I'm not seeing any fundamentals that would cause the market to react in a bullish way. But what I'm starting to see is traders who got in at the high 107 area who are beginning to panic. And we discussed that last week as well. Let's see if the trading bars get extended. If so, this is the first sign of panic selling. But right now, don't expect too much for the upside in this market. Looking at the currency market technically, the Canadian dollar is at a crucial support area as we speak. I want to show you the long-term chart so you can see exactly what I'm seeing right now. It seems like the Canadian dollar has been bouncing off the 95 level for over 3.5 years. And once again, we're testing the support level. So the question becomes, are we going to move back up to the resistance level, or are we going to break the low and continue moving down? And I mean really down. Let's take a closer look with a daily chart so we can continue our analysis. The first thing I do when looking at long-term support or resistance level is to see if the market is overbought or oversold. And in this case, the RSI is well above 20. So we're not in a danger zone right now. In my opinion, we are going to stay around this level over the next few weeks, and I will keep my eye on it. But from a technical perspective, I'm not seeing anything that would suggest a break below the current level, at least not a real strong break. I will maintain a daily watch and will update you if I see something inconsistent with my analysis. There's a few setups for today that we need to take a look at for tomorrow. There's a 4x4 to the downside on ticker symbol XL, and another one on ticker symbol SSTK. You should place a sell entry stop 10 cents below today's low, and if filled, place a protective stop 15 cents above today's high. I will update you tomorrow morning and earlier if I see anything developing. Have a great night, everyone.